So as Christina said, I was born with what I call the ocean gene, which means I can't walk past a body of water without jumping in or splashing or swimming or doing something. And I imagine that some of you in the audience feel the same way. Just curious, quick show of hands, people. Lots of us I see. So I did lots of ocean things growing up and through college and even a few years after that. And then I spent 30 years in the finance world. And over the last couple of years, those two interests of oceans and finance came together, and I became fascinated by this idea of creating a sustainable blue economy for ourselves and for our future. And different people define blue economy different ways. I'll give you my definition, which is imagine the earth and imagine the oceans and all the human activities that happen in the oceans. And that could be fishing or tourism or transportation or port management, or it could be generation of energy. And that energy could be fossil fuels or it could be renewable energy. The sum total of all those economic activities are the ocean economy. When you start to incorporate principles like sustainability, stewardship, justice, equity, then you're talking about the blue economy. And you can't just flip a switch and say, let's take it from the ocean economy to the blue economy. You have to have a transition. And that's a concept we're used to because we see that happening in energy. And transitions, of course, come with risk. But in this case, it also comes with an enormous amount of investment opportunity and growth. And to give you a sense of the scale, one 2019 study added up all the capital it would take to fulfill the targets and goals of SDG 14, life below water. And they came up with an estimate of something like $150 billion net contribution per year all the way through 2030. So that's obviously a lot of money. And if we want to accept that generational challenge to design this oceans of the future that we all want to do, we're ultimately going to have to engage finance investments to help get that all done. So now comes the time of my presentation that you've all been waiting for, where I review various definitions and equations and acronyms. And I took the liberty of jotting down a short list. This won't take long, I promise. It's alphabetical, and up first we have the American Academy of Underwater Sciences. So it might be, well, no. So we're not going to do that. We're going to do one slide. And the reason I'm doing it in one slide is because I want to leave you with a way to visualize the different ways that capital goes into the oceans. And I'm going to call it the 3 ways of capital going into the oceans. And if you own a boat, you're familiar already with the 4th way it goes into the oceans. So how does that happen, and where does it go to? That's what we're going to talk about. And the good news about it is that there are opportunities for everybody in this creation, whether you are an institution or an individual, whether you have millions of dollars to invest or thousands of dollars to invest. There's a way to participate in this generational shift towards a blue economy. So to the left, we see donor funding, and that's foundations, individuals, grants, governments. And the uniting theme here is that these people don't expect their money back, much less expect a return on that money. This has been the bedrock of ocean action for decades and will continue to be a vital part of the equation going forward, but it's measured in the billions, maybe tens of billions, depending how you count on it. But remember that $150 billion number, that tells you that we need more things than donors to make this all go. As you shift over to the right side, the expectations of return increase until you get all the way to the right-hand side of the scene, where that's market-based investing. And the definition there is someone puts up their money and they don't expect any concession in yield for what they're going to do. They want to invest thinking that they're going to get the same return, or they have the ability to get the same return that they would get in any other investment they made. So all the environmental and social benefits and good things that happen are on top of what they expect to be a competitive yield. Why are people excited about this part of the market? It's because it's measured in the trillions. And say, wow, if we can harness that, this will be great. The good news is that there's a proliferation of all kinds of opportunities in this market-based area, but although it's coming from a smaller base, so we still have a long ways to go. But if you look at the combination of ocean awareness growing, and that could be Blue Planet 2 or My Octopus Teacher, if you look at the growing realization that oceans and climate are twinned and you can't fix one without fixing the other, and now you add biodiversity, you've got a number of powerful investment themes that are driving interest and capital into the markets. Then you add on consumer preferences with people being willing to pay up and be loyal to more sustainable brands. And then you imagine the person going to their financial advisor and saying, hey, I'm hearing seaweed is this miracle that can do all these different kinds of things. Or I'm hearing that there's new kinds of plastic substitutes that are being created that can stop all this plastic from going in the ocean, so we don't have more plastic than fish in there by 2050. So these kinds of inquiries stimulate the production, and the asset managers are listening to that, and then generate products. So if you're in the US or in Europe, in the equity markets now, you can buy an ocean ETF. If you're in Europe, you can buy a managed equity fund that focuses on ocean governance, or one that focuses on smaller mid-sized companies that specifically do blue economy. In blue bonds, we're going through a transition. Historically, those have been more debt for nature swaps. Sorry, that's a little bit of jargon, but for some of you, but also smaller sovereigns. And now what's happening is blue bonds are getting bigger. And they're nowhere near green bonds yet, but you are starting to see larger issues, sovereign issues, and there was just the first blue bond done as a corporate bond, which was a first. And so that market will grow, and all of us will be able to invest in that as well. On the private equity side, some of the larger firms are nibbling around the edges and doing some deals, although they're not calling things ocean funds per se. But there are a dozen or so wonderful blue economy focused funds that are out there that are focused on exactly the kinds of things we've been talking about tonight in terms of building the sustainable blue economy. Now, they tend to be smaller and they're a little bit more towards the emerging company size, but having said that, they're starting to be offered on platforms and wealth management firms, and they are private equity. Down below that, we have venture, and there are thousands of companies literally around the world attacking all these kinds of issues and opportunities, and they're supported by a global network of incubators, accelerators, angel investors, and that market is growing extremely quickly, and that's a place where many people can get involved because you don't have to have enormous amounts of wealth to invest in some of these companies, things that you might find interesting. Even if you add all of that up, versus our 150 billion, there's still shortfalls, even though this is a promising area for growth. So we moved to the last area in the middle, and I called it blended finance. But I also threw out some of the terms that you might hear because different people talk about it different ways. So blended finance could mean you take donor funding that doesn't require a return, and you combine it with market-based funding, and you can do things that you haven't done before. You can go after some of the things that have higher social justice components to them, but also things that are harder to finance strictly in the capital markets. In addition to blending, you could just have a single investment, and that investment maybe instead of having a return of 15 or 20% that you might look for in private equity, maybe you get a 5% or a 10%. That would be concessionary. So you get the idea. On the extremes, you have don't want any of the money back, just want you to get something done. And on the other extreme, you have, I'd really like a market-based return, but there's this really important area in the middle where so much of the blue economy is going to be created. And one example, just imagine a big, beautiful coral reef in that middle segment there. So we all want beautiful coral reefs. We want the biodiversity, we want the storm surge protection, we want the fishing, we want the tourism. Question is, who's going to pay for it? And that financing largely is coming now still from blending different kinds of finance in the middle, but with really smart people trying to figure out how to get over to that market that has the trillions in it. So it's a critical part of the market. It gets under focus, and that's the reason I'm giving you those three examples is to call out that middle, which is so important for us. So let's pull back the camera and say, where does that leave us? It's nice to know all these dynamics, but where can we participate? And that's the beauty of it, is you can participate wherever you want. So for instance, if you're into philanthropy, you can either go with these large global NGOs that have scaled programs that do excellent work around the globe, or you can find a startup NGO and totally make a difference in what they're doing by your funding or even getting engaged with them. So that's something you can do on the donor funding side. In the blended finance side, now that you know a little bit of the mixing and matching that goes on, if someone tells you something is blended finance or impact or things like that, ask a few questions and try to figure out, maybe there's a part in there that makes sense for you. And maybe it's a market-based piece, maybe it's a donation piece. And the reason the donation piece is so critical is that it de-risks a situation. If someone knows that someone's going to be in there first and have the first loss, as they say, they'll be more likely to put the money in because it will be safer. So that part in the donor funding continues to be critical, often in, as it says, a catalytic way. And then over on the market investing side, we've talked about the different kinds of asset classes, if you will, equities, bonds, all the standard asset classes you would see from your financial advisor. But those also go in the other direction. If these are the asset classes, then this way all these sectors of the blue economy, you can invest across all of these. You can find things to do in renewable energy. You can find things sustainable aquaculture and fisheries. You can find things to do in decarbonizing shipping or ports. You can find robots, you can find data, you can find all kinds of ways to get it engaged. And that's the message I want to leave you all with tonight, is that the oceans are truly investable. And I'd like you to think of this as an invitation to join in this creation of a sustainable and just blue economy for the future that we can all be proud of. Thank you very much.